The Bank of Canada makes its first rate decision of 2026 next week, and spoiler alert, they're going to do absolutely nothing. But here's the thing, the nothing they say might actually matter. Today, what the hold means, why your fixed rates went up while the bank is going to do nothing next week, and what all this means if you're buying, renewing, or just trying to figure out what's happening. Let's get into it. All right, Wednesday's Bank of Canada rate decision. Here's what we know so far. Every single economist in the latest Reuters poll, all 35 of them, expect the bank to hold at 2.25%. This isn't a guess. This is a foregone conclusion. Markets are pricing in basically zero chance of a move. Quick recap, the bank cut 275 basis points between June 2024 and October 2025. That's the most aggressive rate cutting cycle in the developed world. Then in December, Governor Macklin basically said, we're good. Rates are about right. So what's actually happening Wednesday? The interesting part is the MPR, the Monetary Policy Report. This is where the bank updates its forecast for growth, inflation, and employment. And here's what I'm watching for. First thing, how do they talk about trade? The CUSMA review is being called the defining issue of 2026. They sound nervous, fixed rates could ease. They sound confident, they might firm up. Second thing is GDP forecasts. Q4 2025 might have been negative. Q1 2026 might be negative too. That's technically a recession. Will they acknowledge it? And three, the word hike. Some economists think we could actually see rate hikes later this year if inflation stays sticky. Watch if that enters the conversation. The bank's stuck between two problems: cost push inflation from tariffs and demand pull disinflation from trade weakness. They're watching and waiting. Speaking of inflation, December's CPI dropped last week. Headline 2.4% year over year, up 2.2% in November. Now, before you panic, the core measures, the ones the bank actually cares about, were soft. Trim mean came in at around 1.1% on a monthly annualized basis. Weighted median, 0.5%. The translation, the stuff that actually drives lasting inflation is cooling down. The headline number got pushed up temporarily by factors and base effects. The story right now is services, shelter costs, insurance, telecom. That stuff is sticky. Goods inflation is basically flat. For Q4 as a whole, headline inflation averaged 2.3%. The bank had forecast 2.0%. So slightly hot, but not panic and hike hot. Bottom line, inflation isn't giving the bank a reason to cut, but it's also not forcing them to hike yet either. All right, let's look at actually where rates are this week. 5-year fixed, best insured rate 3.79%, best uninsured, that's 20% or more down, purchases over $1 million, about 3.89%. The big bank posted rates still way higher, and really don't accept these. Here's the thing, fixed rates have actually ticked up about 20 basis points over the past few weeks. Why is that? Well, bond yields. The 5-year Canadian government bond yield is sitting at around 2.8 to 2.9%. Strong labor data, sticky inflation expectations, and global uncertainty have kept yields elevated. The 5-year variable best rate is around 3.4 to 3.45%. That's about prime minus about 1 to 1.05. The spread between the best fixed and variable is about 44 basis points right now. Variable is cheaper. Despite variable being cheaper, 80% of mortgage inquiries last year were for fixed rates. It's just because Canadians love their certainty. Rate of the week is a 3.74% 5-year fixed high ratio from a few monoline lenders. If you're putting less than 20% down and have strong credit, this is certainly worth a look. So the question everyone's asking, fixed or variable in 2026? Here's my honest take. The case for variable, if you're paying less today, about 44 basis points, and rates stay flat through 2026, which most economists expect, you save money the whole time. If we get a surprise cut mid-year, you win even more. Case for fixed, you're paying insurance against rate hikes, and some economists, Scotiabank, National Bank, think we could see around 50 basis points of hikes in late 2026 if trade deals go well and inflation stays sticky. My framework, if you can handle the payment going up around $200 to $300 a month in a worst case scenario, variable really makes sense right now. If that would stress you out, lock in. The fixed rates we have today are still historically reasonable. If you're renewing, this is your year. 1.2 million mortgages are up for renewal in 2026, and here's the thing, 28% of homeowners are switching lenders. That's up 46% from a year ago. The banks know you have options, and you really need to use that leverage. Here's what I'm watching for over the next week. Wednesday, January 28th is the Bank of Canada rate decision plus the Monetary Policy Report. The decision itself, boring. The language, that's where the action is. Watch for any hints about the path forward. February economic data, which is January jobs report, and they come out the early February. If unemployment ticks back up, rate cut talks come back on the table. If it keeps falling, hike talk gets louder. Today, trade headlines. Every CUSMA headline moves the markets right now. Prime Minister Carney just did a trip to China, announced some tariff relief deals. The U.S. situation is still unresolved, and really this is the wild card for 2026. Spring market outlook, Korea is forecasting a 7.7% increase in sales this year. That's the highest since 2021. Average prices are expected to hit $698,000. Spring is shaping up to be busier than last year. If you're buying this spring, get your pre-approval now. Lock in a rate hold for 90 to 120 days. Rates might not move much, but you don't want to be scrambling in April. It's your mortgage rate update for the week of January 23rd. Quick recap, the Bank Canada rate decision is Wednesday, and a hold is expected. Watch the language. Fixed rates, about 3.84% and slightly up from recent weeks. Variable, around 3.45%. Still cheaper, but they're less popular. Play right now. If you're renewing, shop aggressively. If you're buying, get pre-approved and lock in a rate hold. If you want to see what your best rate is for your specific situation, that's what we do here at Everyrate. We compare 30 plus lenders to get you the best rates. The link is in the description. Subscribe and hit that bell to see some of these rate updates every week. I'm Andy, and this is Mortgage Rates Weekly. We'll see you next week.